one thing that's been going through my mind is people that are taking huge risks on a daily basis, like trying to capture this down move, which we know will happen. A down move today, like 11, 12%, very historic move. If you try to capture this move, you also will most likely miss the upside as well. Well, it's not the easiest day ever. It's March 16th. It is a Monday. And today, there was a huge drop in the market. A very historic drop, about 3,000 points in the Dow. Not really seen since 1987. And this crash is, of course, overall bigger and faster. So, the only real comparison in modern times has been 2008. And there seem to be quite a few similarities here between this crash and 2008, namely collateral starvation, drop in real estate prices of recently, drop in oil, and spikes down in precious metals and other commodities. So basically everything but the dollar, and very high quality um, government debt, U.S. government debt, right? So that's what's been going on. I just want to show you here before I even show you the account. I'm down significantly. Excuse me. I want to show you this map here, right? Just look at some of this carnage that's been going on here. We have Microsoft 14.74%, Apple down almost 13. You can see how the entire world basically is big time in the red. Visa's down almost 14%, 13 and a half. Just the carnage is just enormous. Very large. So back to the account. I'm sitting at 55,638. It's very low. Could have been worse. Could have been worse since I still have some collateral which is used up in margin. So I think my account is pretty safe for another 15%, 10-15% down drop. But after that, I may have to liquidate some of this, and hopefully this isn't the black swan that kills the account. It's quite possible that there could be a further downside, especially since there's nothing to suggest that the trend has been reversed. So it's very dangerous. But what my bet on here is that there's going to be some kind of recovery in the next 2 weeks, and people will come down a little bit. I'm here in the Silicon Valley, okay, Bay Area, San Jose, California, that area. And just now, we've been ordered by the governor to just sit at home, and only grocery stores and the police and pharmacies are open at the moment. So it feels very apocalyptic. Um, Nobody's going out. I'm not going to be working for a couple weeks or so, and it feels very unreal. But that's the situation we're in right now. So a lot of businesses are coming to a halt from my financial standpoint. This is going to be a big hit, and I think that everybody's going to take a little bit of a hit. Not just the employees, but also the employers, because a lot of them are, choosing to pay their employees regardless of whether they're coming to work or not, because for many reasons, right? They want to keep them as good employees. They want to make sure that they preserve their labor force, and just because it's the right thing to do. So it's very uncertain how these things will play out. But more specifically, I want to talk about a couple of plays, and you can sense in my tone that it's very dire situation here. But I have to, you know, remain calm and make sure that I just look at the numbers and operate based on facts here. So here's what's going on, right? Gold. All right. Let's take a look at the GLD, which is just the ETF that represents the precious metal. And oh boy, no, no thanks. What? Not Bitcoin, gold. GLD, silly. All right, that's funny. Okay, so you can see that the gold has been trending down with the crash, especially in the last week or two. And even though the fundamentals don't really say that it should, one of the biggest reasons why it's doing this is because uh, people who hold funds need to liquidate collateral in order to fulfill their margin calls and margin requirements. So basically, so basically, it's being sold off in order to meet these requirements, and as well as silver too. That precious metal has been hit as well. If we go here to SLV, which is of course the silver ETF. Okay, let's see, SLV. Hello. All right. Well, anyways, I'm using the Wi-Fi at the moment because my connection's broken. It's been raining pretty hard, so I may have to fix it. It's a bit slow. Anyway, so the gold and silver are both down, but I think what's happening is that the same thing is playing out as it did in 2008. There's a shortage of collateral, and so people are scrambling to find in dollars in order to fulfill the requirements. So now they have to sell off their best quality collateral, which includes the precious metals, and that explains partially the sudden drop in price. Now, whether or not it's going to be a repeat of the 2008 where both metals skyrocket sharply post event, that's yet to be determined, but that is one bet that I'm making. I'm making that the bet that history will at least partially repeat itself and we're going to see the similar kind of gains. If you think about it, silver right now it's sending somewhere in the upper 12s, and I remember during 2009 or 8, silver dropped all the way down to $9. Now, counting inflation, that's pretty much the same price that it is right now, maybe a little bit lower, but it's definitely scraping towards the bottom. Like I can't see silver going anywhere below 9. It's a very very extreme price for the commodity, especially given where inflation is right now and given the total money supply that is out there outstanding in the world. I mean, we're talking about 1.5, or is it 1.7 now, or actually 2.2 trillion maybe of US dollars, right, committed to purchasing US treasuries out in the open market, doing open market operations and funneling money, basically forcing the sellers of these bonds to um, either bid up out try to outbid the Federal Reserve, which they'll never win, or put the money to work somewhere else, quote unquote work, which is things like real estate, corporate bonds, stocks, and other debt instruments. And so that's really what they're trying to do. So far it's really not happening, right? Everybody's hoarding cash and waiting for a bigger, more serious downturn in the markets, which we most likely will have. But you never know what kind of turns you're gonna have to make in order to go on the other side of the forest, right? You don't know if you're gonna be cutting down trees to the left or right, or we don't know how this choppiness is gonna manifest. So one thing that's been going through my mind is people that are taking huge, huge risks on a daily basis, like trying to capture this down move, which we know will happen. A down move today, like 11, 12%, very historic move. If you try to capture this move, you also will most likely miss the upside as well. So you might be stuck, 10 or 12% behind everybody else who just decided to hold on and just reshuffle rather than um, try to take big cuts and do like a win or loss situation here, because doing that is basically like gambling, right? You're either putting it all on red or all on black in the casino, and sure you could win big or you could lose big, All right, but that's not what investing is all about. That's not what um, portfolio management is all about either. So the prudent thing would have been to have a more sizable insurance policy, right? So basically, taking out puts, right? Buying puts, short-term puts, maybe a few months. Um, Having something that correlates negatively with the market, like SDAO or SH, at least temporarily, to try to recoup some of the losses that you're experiencing with your account. My insurance was kind of small, so the losses are obviously outweighing the insurance at the moment. Um, but I don't plan to increase it because if I do, then I'll end up spending all that money in insurance and not recouping any of my losses whenever the market does turn up. And obviously, I do believe the markets will turn back up, as well as my highly market correlated account at the moment. Especially silver, actually. I'm really making a really, really big bet on it, and I hope it works out. But I'm expecting it to recover above my previous highs once and if things return to normal and economic activity returns to normal. It's hard to know when it will happen. Obviously, I'm not a virologist. I'm not even going to speculate on the timing of these things. I'm not the most informed about what's going on. But what I do know is that humans have survived every single crisis before, and they have thrived even more post crisis. So I don't see why this would be any different. So to me, it's a matter of surviving and being able to be patient enough and disciplined enough to wait it out and come out on top at the end. All right. Hopefully, you guys good luck catching knives, and yeah, hopefully you're having a better time than I am with my account at the moment. All right. The word for today is gonna be, what is it gonna be? Um, Survive. All right. So if you managed to watch the video all the way till the end, type survive in the comments to let me know that you did that. Peace out.